In this video, I've tested the famous 0.618 Fibonacci retracement level for 100 trades in a row. Stick around to see the results at the end. I'm going to talk about what the strategy is, exactly what I'll be testing 100 times, and then show some examples. But first, a quick shout out to my affiliate Capitalize.ai, and then we'll get into things. Capitalize allows traders to create and automate their trading strategies just by typing them out in plain English with no coding knowledge required. You can simulate backtest and deploy strategies all from your phone and all from free. Check it out with my link in the description down below to support the channel along with my other affiliates and Patreon page. Thank you. Now let's cover what a long entry will look like with this strategy and what I'll be doing to place the stop loss and take profit target. So for a long entry, I need to have the condition where the market structure breaks to the upside. So if we look at this downtrend, we see a market structure break to the upside, which occurs right here. There's no longer a lower high. So the structure is broken to the upside right when it takes out the high here. So the next thing to look for is the pullback into the 618 retracement level. And what you do is draw from the bottom of the move to the top of the move and then look to buy at the 0.618 Fibonacci retracement level. For this strategy test, I'll be looking to place the stop loss at the low and then looking for a 1-to-2 risk to reward ratio. So this is what a standard trade setup will look like for this test. And one very important thing to note about this test is that drawing a Fibonacci retracement is very subjective. So everyone will draw them in different places and choose different setups to take, which makes this specific test compared to a lot of the other ones that I test very difficult to gauge the accuracy on when it comes to back testing. Real-time results may differ drastically with this one compared to other trading strategies that I've tested on my channel, just because most of the time I'm testing a completely objective rules-based system, while this one, market structure is involved, which is subjective, and then choosing the high and low where to draw the Fibonacci retracement tool is also very subjective. So it's going to be a more subjective test, but a highly requested one. So I will do my best to take a look at market structure and draw the Fibonacci retracements appropriately without having any sort of bias. But it's impossible to eliminate all bias when it comes to backtesting with the Fibonacci retracement tool. So I'll be doing my best to look at market structure and the highs and lows that I'll be drawing the Fibonacci from in as an objective of a way that I possibly can. So that will be a long setup. Break of structure to the upside, which tells me what the trend direction is. So see that break of structure to the upside, no longer creating a lower high in the trend, which will mean I'll be looking for a long trade. And now let's move on to a short trade example where we'll see a market structure break to the downside and then look for a shorting opportunity at this 0.618 Fibonacci retracement level. Now let's go through a couple more examples. Here's a short example where we see price action making lower highs and lower lows. So we look to the major lower high, and then we can draw the Fibonacci retracement tool from the high of this pullback to the low where it makes a lower low, and then we see a pullback into the 0.618 retracement level, which would be the entry price right at that level. Again, stop loss will be placed expecting a lower high and a lower low out of the trend and using a 1-to-2 risk to reward ratio. Now let's go on to another example just to be extra clear about what I'll be testing. Now here's an example with the market structure break included. So we can see that price no longer creates a higher low here. So what I'll be doing is expecting a lower high to be created after that market structure break to the downside and drawing the Fibonacci tool from the high to the low and then looking to enter into a short position at the 0.618 Fibonacci retracement level with the expectation of a lower high. So the stop loss placed to that high before the move down and then targeting a 1-to-2 risk to reward ratio. And I'll go through just one or two more examples to just kind of clarify everything, make it as clear as possible. All right, so getting into another example, we have a major high or lower high within a downtrend. We have a major lower low, so we can put in our Fibonacci tool and look to short at the 0.618 Fibonacci retracement level. So it would look like this, with the entry price being on this candle, and again targeting the 1 to 2 risk to reward ratio with the stop loss placed at the previous lower high in this overall downtrend. Now let's go on to a long example. All right, so final example here. This is a long example where we see major higher lows and higher highs being created by the market. Now we look to the lowest point of the previous higher low in the uptrend, then the highest point before the large pullback begins. Then looking to buy at the 0.618 Fibonacci retracement level within the context of an uptrend and targeting 1 to 2 risk to reward ratio from there. All right, so now just repeating again, the subjectivity of this is really huge and will make a big difference for person to person. So there may be these smaller pullbacks within these moves where you could test those, and I'm gonna try and just be using as major and clear higher lows and higher highs and lower highs and lower lows to draw my Fibonacci retracements from, and as well as the market structure breaks, looking for clear and very just easy to spot setups that are most likely going to be ones that you can see clearly in real time. But of course, again, it's very subjective, so this test is not going to be, very accurate when it comes to applying it in real time, just so you guys are aware. But anyway, I'll move on to the 100 tests, and we'll talk about the results at the end. The results are in after the 100 back-tested trades. This was done on euro against the US dollar on a 1-hour time frame using a 1 to 2 risk to reward ratio. It took 5 months of price data to find the 100 trades, and out of those 100, there were 40 winning trades and 60 losing trades. The most losses in a row was 8, and the most wins in a row was 5. The gain on the account, after all that, 20%, risking 1% of account equity per trade, and also not compounding. So this one didn't do all that great for a 1 to 2 risk to reward ratio, and I tried to be as objective as possible. Again, when testing with the Fibonacci retracement tool being so subjective, it is difficult to accurately test this in a backtesting fashion, but I'm sure that you can figure out a way to make this more profitable. I was using a strict 1 to 2 risk to reward ratio, and you can definitely use methods of trade management to move the stop loss to break even or take partial profits at the highs before the pullback, other things that you can do to manage the trade in a more effective way and increase the gain on the account figure. And in real time, you can use other factors in combination with the risk to reward ratio and the Fibonacci retracement tool to, increase the results and that gain on the account figure. But let's pop this on over to the strategy ranking spreadsheet and compare it to the other tests. All right, so here it is on the strategy ranking spreadsheet at spot number 69 out of 91 strategies tested now on the channel. So it's not doing very well. It's kind of on that low end with 20% gain on the account, and in 5 months, that's just not that great. If we take a look at some other 1 to 2 risk to reward ratio strategies, a lot of them are falling in these top spots. So if you can get up in that high 40% win rate, even 50% win rate with a 1 to 2, then that is spectacular. But being at 40, it is on that lower end of the spectrum. So this Fibonacci retracement trading strategy is, profitable and potentially profitable, but just doesn't quite hold its own against some of the other strategies tested. And again, you can be more selective about the setups, and I'm 100% sure there's plenty of people who trade plenty profitably using Fibonacci retracements as part of their strategy, but purely Fibonacci retracement with just market structure may be a little bit challenging, especially for newer traders with the subjectivity of it. But that will wrap things up for this video. Just to recap, check out the capitalize.ai down in the description, my affiliate, Bybit affiliate, and also Patreon page to learn my personal trading strategy and access 19 trading scripts along with 3 custom indicators. But that'll wrap things up. Have a great day, and thanks for watching, everyone.